Chris. Taking a look at the dollar yen, and you can see that we have, in fact, broken down pretty significantly, and we're basically right on the precipice. I said if we got down below here, basically 109.50, and we're only about 13 pips from there, that things could get rather bleak, and we are definitely seeing that. So I think we're going to see a run back into the yen. Very confusing, and don't be dissuaded, and don't be upset about trading if you're struggling. Most professionals I know right now are having trouble keeping track of the money flows, and that's all this is. This is money flowing out of the U.S. now because so much of it had been thrown in there as a safe haven asset. Liquidity is being found or is being traded wherever they can find it. Previously, it was the stock market. Now everybody's trying to get out of the U.S. stock market. Looks like they're going into the yen again. Give it enough time, they'll go back into the stock market. This is kind of like, I guess the best way to describe it is like a rolling bear market. When you just, most of the time you see these inside the stock market, it'll be like from cyclicals to technical companies to energy to, you'll see that. We're starting to see it around the world with global assets. And, that of course counts Forex as well, because quite frankly, most of this day was relatively benign, but that obviously has changed. Aussie dollar has rallied significantly. I do see a cluster of resistance here at 66 and 67. So I am a seller at either place on a daily candlestick. The Australian dollar is oversold. We're getting a nice bounce here, but it's only a matter of time before the sellers come back in. The downside of the US dollar is somewhat limited at this point. And going back to that, the dollar yen breaking down, that could be a signal to start selling something else like Canadian dollar yen, New Zealand yen, pound yen, that type of thing.